OPEC and non-OPEC oil producers, known as OPEC Plus, will meet Sunday to weigh the impact of a pending EU ban on Russia's crude exports and a possible price cap on Russian oil. The influential alliance of oil producers will also decide on the next phase of their production policy. The supply side in oil markets is becoming increasingly complex in December, with the possibility of new OPEC Plus cuts, an EU embargo on Russia's seaborne crude imports, and a possible cap on Russian prices. Well, joining me to discuss the dynamics of the impending OPEC Plus decision and near-term outlook for the oil market is Bode Ososami, global business analyst with over 15 years experience consulting in oil and gas sectors, and he's retired as director and head of Essential Oil and Gas Practice in Nigeria after over 20 years with the firm. Thanks for joining us, Mr. Ososami. Well, my first question to you is really around the fact that over the last couple of months, we're seeing about 2 million barrels a day in oil cuts by OPEC. What do you think the next move by the cartel will be on Sunday?
Thank you, Rolake, for having me on your show. Indeed, ahead of the decision on Thursday, the 12th technical meeting of OPEC and the non-OPEC countries participating in the Charter of Cooperation, they met in a hybrid format. At about 12, the Joint Ministerial Monitoring Committee will meet. That's about noon Vienna time, and that will be followed by the OPEC Plus meeting itself. It's about the data. I've followed OPEC for over a decade. They are quite data dependent, but there are other issues, especially the latest forecasts on demand, noting that oil demand is still under pre-COVID levels, assumptions on the outlook, the simmering geopolitics, and of course there is some influence that Russia has on the Saudi-Russia. There's a Saudi-Russia pact of sorts, given this Charter of Cooperation. I see a 60-40 chance in favor of a pause, but there are compelling factors also pushing a decision to cut production. Favoring a cut is the issue that Russia is most likely pressurizing Saudi Arabia to sponsor a symbolic cut, at least to firm up prices, to help their revenues, especially with these embargoes coming on. The strong dollar is still weighing on demand, and that will continue to weigh on demand. The global economic outlook, of course, you know the picture with COVID in China, projections for most of the world to be in recession in 2023. All that will hurt demand. On the supply side, we must note that Russia has been pumping barrels into the market. Russia produced 10.9 million barrels in November. They increased their exports to China, India, South Korea, and Japan last month. There's a lot of panic buying ahead of embargo. So there's a sense there's a bit of a flood as far as oil is concerned now. US has eased the way, of course, for Venezuelan oil to also return to the market. So all that is favoring a cut. But favoring a pause, one is the uncertainty, a lot of uncertainty, especially how Russia is likely to respond to new oil sanctions. They say they will not shoot themselves in the foot, but they're analyzing all the issues. There's also pressure from the US to keep prices low. You remember there are still hanging threats over Saudi Arabia waiting for action if further OPEC Plus cuts raise oil prices. And some have said changing the meeting to virtual is like a white flag. No drama scenario of waiting to see how the next month or so goes. And then we've had comments from the Iraqi oil minister who just today said OPEC is still committed to the agreed production rates till end of 2023. OPEC controls 35% of the market. They believe underinvestment in oil and all the recent macroeconomic shocks that sent gas up over 1,000% is what is driving higher crude prices. And of course, we know crude has been up over, say, 40%. But they see oil at over $90, that's Brent, to get the right level of investments to balance the market.
Okay. Yeah, thank you very much, Mr. Ososami. So I guess if we go with the cut scenario, what quantum of cuts are we really talking about? Is it likely to be similar to what we saw at the start of November?
Well, I doubt, although there was a 2 million official cut, The actual production in November, I understand, amounted to 29.01 million barrels per day. That's like 710,000 barrels per day less than in October. So it's much, much less than 2 million. So we have to understand the reality as opposed to the plan. The heavy lifting continues to be done by Saudi Arabia, which we understand cut its November output by 500,000 barrels per day compared to October. OPEC Plus, however, will still want to flip the futures curve from where the spot or cash price of oil is. It's presently lower than the forward price. That's also called the contango, implying that future prices are falling over time as we get new information, bringing them into line. So they want to flip that to a backwardation where the cash price of crude is higher than the forward price. If they don't, all prices will further decline, which OPEC will not want. My sense is it will not be more than 500,000 barrels at all, or if you say anything at all, given we have to factor a 10% cut from Russian oil, which is like another reduction, which will happen, I think, with this embargo. And of course, the potential risk of a sharp U.S. reaction if they try anything very aggressive.
Yes, indeed. And actually, on the point of the trajectory for long-term oil prices, some have long argued for many years that the balance of power is tipping away from OPEC to other players in the global oil market. But it appears that actually OPEC seemed to have great foresight by deciding to cut production 2 months ago in light of slowing economic demand around the world, particularly from China. Does this signal a strengthening of OPEC and the OPEC Plus alliance as continued strategic players in the global oil market for decades to come?
Well, clearly there's been a lot of improvement in the analytics coming out of OPEC. If you follow the data, the reports, and they've done this for a long time. So if you do something for decades, you would know what is going on in the market. They have the right instincts about the market, and they've made this their main business. So I would say yes, indeed, the analytics are much, much sharper. The forecasts are more realistic, although we now begin to see a closer alignment between OPEC data and the EIA data, for example, and maybe others who also have data in that space. But the alignment, I think, issue or the strength of OPEC was enhanced, in my view, by this Charter of Cooperation Pact. Bringing Russia into the mix obviously made them a much, much stronger player in the oil and gas space. But 35% is not a very, very huge, not a huge percentage in my view. The US, in my view, still is the most influential player here if they intend to use that influence for various other reasons. A lot of the technology is coming from there. The financing, a lot of that still comes from the West. And if the money doesn't come, of course, you know what happens. There's no oil coming out of anywhere without the capital. The capital is still controlled from the West. So I think there is some check and balance, which I think is healthy. OPEC, yes, they can play around with their production quotas, and of course the West can hold the funds. And we also know there are all kinds of ways in which the US can make it a bit difficult for Saudi Arabia with contracts for their defenses and so on, if they don't play ball. But I think OPEC is certainly in a much better position than it used to be.
Okay. Now, speaking of the U.S., there are several key protagonists involved in the global oil geopolitics. The U.S., the EU, Russia, and of course the Saudi, although Saudi is already part of that grouping. But who do you think really has the greatest card to play here? Russia is facing a cap on its oil by the EU, a ban on exports actually by the EU, but it doesn't seem to be buckling under pressure and has made further moves domestically to expand alternate trade routes for its oil. So who do you think here will really come out victorious in this global game of oil geopolitics?
Well, that's the billion-dollar question. If I knew the answer, I probably wouldn't be here. I don't think anybody knows the answer to that question. It's a very difficult question. There's so many issues at play. Clearly, the US have a strong hand. They're a major part of the market, although they've tended to stay out of the fray of getting into demand and supply issues for oil. But that is changing with the 2024 elections. And of course, Biden wants to keep oil prices down. The EU, and especially the G7 as well, obviously, the technology, the shipping, the insurance services, oil is not just oil on the ground, funding also. So they also have a lot of power, and you would see from tomorrow, sanctions are going to be rolling in terms of this price cap that will limit European shipping and insurance services. And of course, Russia being a very major player. The thing about Russia is that a lot of the infrastructure that is already going into Europe comes from Russia, the pipelines, the gas pipes, and so on. You can't switch things like that off and on over 2 months or 3 months. It's very, very difficult. And that gives Russia also some power, in my view. So it's an interesting mix. Of course, Saudi Arabia continues to be very strong. They have a lot of experience, and also the cooperation they have in OPEC plus. But Saudi Arabia is also dependent on Western funds, Western technology, Western defense capabilities, and so on. So there's that in the interdependence. I would give the edge to the US, in my view, based on what I've seen over the years, but certainly their strength and their competitive edge is slowly ebbing.
Indeed. And of course, the US has strategic stocks that it does release to the market to balance domestic oil markets and keep gas prices low. Well, a final thought, really. We've been talking so much about the supply side, but really there are countries around the world who will feel the crunch from high oil prices, imported inflation, domestic petrol prices like we have here in Nigeria. What do you think the impact on those markets, particularly those who, like Nigeria, export crude oil but do import a huge amount of finished petroleum products domestically?
Well, my view has always been you just can't be producing. You have to look at the entire value chain. Nigeria has been in this business for almost a century, and we're still very weak downstream. Why that happens, I think, is because we are not as deliberate as we should have been in ensuring the downstream is regulated early and all the issues related to the downstream sector. But of course, all the major importers like India are not happy about high oil prices. China is perhaps the biggest buyer, but China is in a situation where they have other things on their plate now, like COVID, and I guess oil is a list of their concern. So there's quite a mix of issues. Just like you said, some of the winners, I think Saudi Arabia is the big winner. They produce at just $17 per barrel. So even if oil comes down to $30, for them, it's still a huge windfall. Russia produces at about $42 per barrel. I think Nigeria's cost is more like 50, 60. I'm not quite sure. But the important thing for producers, I think, is to keep their cost of production low, enhance their competitiveness for investment, because investment is now demanding higher returns with all the issues around fossil fuels and, of course, climate change and so on. The other thing, of course, that is important is apart from competitiveness, is having the right environment for people to come in and explore, not just take oil out, because, of course, when you're oil, what you are doing is you're exporting jobs. What we should be doing is actually stopping the export of crude oil and push aggressively the downstream sector rather than be dependent on maybe just one big, huge Dangote project, which is what I think is on the horizon as we speak. But clearly, this market is one that is facing a lot of uncertainties. You need to have more in the game, just producing and exporting oil. And I just hope countries like Nigeria would be able to get it right, especially in the downstream sector.
Yeah, thank you very much. Some very interesting dynamics going on there. The complexity of global oil geopolitics. Well, we'll look forward to what the outcome of those discussions with OPEC Plus and the reaction from the US and other parts of the world will be. Always great chatting with you, Mr. Bode Ososami. Thank you very much.
Thank you.